Hello, my name is Jonathan Kalwelo. I'm the team leader at Jonaki Holdings Limited, where we get to support our clients with financial needs. We get to finance their projects, we get to finance their consignments, we get to work with them the journey to scale up their businesses. That's what we do. But I usually want to share with us for yet another topic that we have at hand to support you as a business person, but specifically for the lenders out there, for the people playing in the financial industry. It gives me great joy that we work together to clean up this industry. So our today's topic is, what are those key important documents that you need to give a critical eye, you as a lender? There are some key important documents that you cannot afford to miss as a money lender, as a financial institution. And you have to know the reasons behind those documents. See, it's not a matter of having the documents, but also understanding the background behind those documents. Because the moment you understand the background behind those documents, then you actually understand how to bridge the gaps in case those documents have some gaps, so they have some few things missing. The first key document is the loan application form. The loan application form. So the loan application form is meant to collect much data on the client, as much as you can, ranging from the client names to the client's address, where they stay, where they work, are they married or not, who are the next of kins, who is someone that you can look up to in case this client is not around, who is their supervisor. So you actually have to get the loan application form as much detailed as possible, because its real reason for existence is to collect the information on the client. Collect as much information as you can, because in case of anything, you actually have to have a fallback position, and you're not predicting doom, but you're actually insulating yourself from any potential losses. So the loan application document has to be as exhaustive as possible, and it has to be filled by the client who has applied for the facility. You have to give it a very, very stringent eye, and you have to make sure that all those details are incorporated in there. The second document is the loan agreement. This loan agreement is what binds you and the client that you've served, because you need to confirm that there's a transaction between you as a company, for example, us as Jonaki Holdings Limited, with a client that we have served. And this is one of the most important documents that are recognized in the courts of the law. It's one of the most recognized documents. That even when you go to court, in case a client defaults or there's some issues, actually they ask for the loan agreement. So it has to be aligned to even the law. Because even in the Money Lenders Act and Regulations of 2018, they specify on what it is that you have to include in the agreement. So you have to make it as exhaustive as possible, highlighting the collateral, the interest rates, the charges that you charge, a number of clauses. You may have to revisit the two documents to align your document. But it's important that you get to have a lawyer to look at your loan agreement. So first it has to be aligned to the law, but also you have to get a lawyer to look at it. Why I emphasize a lawyer is, you may not afford the lawyer now, but the key thing is that you may have to look at your lawyer friend. Because this is a person who has qualified to look at those things. He's a person who has studied 4 years or 5 years studying the law, understanding the law. So you cannot convince me that you're going to have the same critical eye as the eye that this guy is going to have. It's going to be different. Why? Because this is a specialist in that area. I'll share with you a story that, when we were starting, we were the lawyers, we were the valuers, we were the administrators, we were doing all sorts of things. But also realize that we are not experts in those fields. And in some of the instances, you look at a car just because it's beautiful, just because it looks clean, that probably it's a newer model, and you give money. And before you know it, the client has actually sold you the car. And before you know it, when the client defaults or fails to pay, and you want to put the car on the market, the amount of money that they tell you cannot even recover the amount of money that you gave the client. Ideally, when you talk to the client, the client just says, you know what, just dispose of the collateral, because it's what I committed, by now I'm not able to pay. So in the instance, the client was actually selling the car. He sold it to you. So same thing, because we are not experts, we can't know the exact value. And that's the instance of the valuers. And that's why I'm emphasizing the lawyer. because he understands the law. He will know the gaps, that in case of any eventuality. Of course, I'm not predicting that the clients are going to give you a headache or are going to default, but you need to insulate yourself as a business person. Well, if it doesn't happen, well and good. But if it happens, you have a fallback position. So you actually have to understand that you have to have a loan agreement and it has to be aligned to the law. You have to close the gaps in the loan agreement. The final one, it is a letter of offer. Now, this letter of offer confirms that the client received the money. It's more like an acknowledgement. Have you ever received an allowance in a workshop or a meeting or something? There is some form that you actually get to sign. That's an acknowledgement form. You actually acknowledging that, look, I have received this 1 million shillings for participating in this workshop or for facilitating in this training. That's an acknowledgement. So the client is actually confirming the amount of money. But also realize that not all the amount that the client applies for is the same amount that you actually get to approve. Usually not. The client might apply for 50 million, but after valuing the collateral and looking at the financials, you tell the client, look, out of the 50 million we applied for, we have only approved 30 million. So what you capture in the letter of offer is the actual amount that the client has received as the final approved amount. So that confirms the actual amount. You see, when you're putting a caveat even in the cards, you secure the amount that you put on the letter of offer. The caveat covers only that bracket of money, not the amount of money that you've applied for. Same applies to the mortgage. When you're putting mortgage in the land title, it is covering the amount of money that the client has actually received, not the amount of money that he has or she has applied, because it could be less. It could be less than the amount applied for. The other thing also to confirm the letter of offer is that the amount should be wired to the client's account or his number or her number. And that number of that account has to be in the names of that very client. That is very, very important. We've seen scenarios where a client comes and says, you know what, I didn't receive the money. I applied for the money, but I didn't receive it. Why? Because you don't have any evidence. They gave you a different number in different names, so you cannot confirm that it is the client that received the money. So you need a trace that even if a court ruled that you run a check on the different accounts, you can actually confirm that the person received their money on the account and that account belongs to them. So that will help you a lot, because there are very many fraudsters out there that can take advantage of the gap that you could have in the system. The bonus thing that I may have to share with you is a CRB form. There is a form called the CRB, Credit Reference Bureau Report or form. This is signed by the client, and then you can actually submit to any credit reference bureau in Uganda, in our jurisdiction, that can confirm that, look, Jonan is applying for this loan, but he does not have any other loan with any other commercial banks or any other banks. Now, it does not capture the money lenders. So Jonan could be having money from other money lenders, but at least you're shielded from lending to someone who is already indebted to a number of banks, but also indebted to other lenders. The other thing is that it can also tell you someone's character or credit rating. Why? Because if I apply for a loan and I commit to pay on the debt, I commit my check and I bank the check, or my creditor banks the check and it bounces, it will reflect on the CRB report. So when you look at a bounce check, it can tell you, look, this client is actually struggling. And then it can give you a way on how to address it, whether to give them the money or not. Actually, for banks, they don't, if you have a bounce check, they cannot at all give you the money. They cannot give you the loan. Why? Because you have a character issue. You said, on this date, I'm going to have money on my account. You even issued a check to confirm that. So how come time came and the person that you were paying banked the check and it bounced? That means you have integrity issues. So it's something that you actually have to consider. If you've not been running CRB reports, it's high time that you run them, because they're not even as expensive. So that was a bonus document that you may have to consider in your transactions. And I think that once you consider all the 4 documents I've highlighted, you'll have taken a huge leap. You'll have taken a huge step to your growth. It will help you a lot. You'll keep in business, you'll be sustainable, you'll be profitable. Because those 4 documents are very, very pertinent in supporting your growth and ensuring you're sustainable and ensuring your continuity. Check us out at www.jonakeyholdings.com, and you can always, like or comment on our YouTube videos. I look forward to seeing you or interacting with you in my subsequent sharings on the different topics. Love you and have a blessed day. Thank you.